Welcome to Alpha Recap. Morgan here. Today we're breaking down a mixed market day where commodities lifted miners, idiosyncratic shocks rattled small-cap tech, and a flurry of corporate filings pushed governance and income names into focus. As always, if you have questions, you can reach us at stockalpha.ai.
Thanks for having me. It was one of those days where the headlines felt disconnected, but when you pull the threads, they actually tell a coherent story about market sensitivity to commodities, liquidity, and regulation.
So, what really stands out here is the commodity thread. Copper trading was a major driver today.
Right. Analysts noted copper was around about $5 per pound, and gold remained above about $4,500 an ounce. That kind of price backdrop meaningfully reshapes the economics of large porphyry deposits.
Tell me about the Schaft Creek angle. Why did miners react so positively?
With Teck Resources reporting a record cash balance and acting as the operator at Schaft Creek, the start of a pre-feasibility study in 2026 becomes a real optionality event. Copper Fox owns about a 25% stake there, so if the PFS produces stronger economics, equity holders could see a re-rating.
I mean, when you step back and look at this, porphyry project economics are extremely sensitive to metal prices.
Exactly. At higher copper prices, previously marginal projects can flip from marginal MPV and weak internal rates of return to robust projects. Analysts highlight modeling scenarios, say $4.50 versus $5 copper, to understand downside and upside.
Quick reaction segment. Now shifting gears. Small cap tech saw some sharp moves today.
Yeah, that tracks. Sivers Semiconductor plunged about 23% after dilution concerns collided with broader risk-off flows in equities. Small caps just got hit hard on liquidity concerns.
So, what really stands out here is the double whammy. Company-specific worries and index-level stress.
Right. And the other thing is that small cap photonics stories are classic tension points. Intellectual property may be meaningful long-term, but if the company faces near-term cash runway issues, the market punishes fast.
Short reaction.
Hold on, say that again.
There was also that legal development involving a hardware integrator in advanced chips.
Yes, prosecutors charged a co-founder of a known systems integrator in an alleged scheme to bypass export controls on advanced AI accelerators. This underlines export control and supply chain risks for AI hardware players and their logistics partners.
That's a compliance headline that can move stocks quickly.
Absolutely. Legal teams and risk officers are on notice. One view is this is an isolated bad actor event. Another is that it reveals systemic weaknesses in counterparty screening and export compliance. Either way, market participants should expect more diligence and potential operational friction.
Short reaction. Let's talk corporate disclosure. A wave of Form 8K filings hit the tape today, and that mattered to governance and income investors.
Yes, there was a cluster of 8Ks from fund and corporate names flagging Regulation FD disclosures, officer changes, material agreements, and updates to financial statements. Examples included funds and smaller issuers where distribution policies or governance changes can matter a lot to yield-focused holders.
Why should listeners care about procedural filings? They often feel boring.
Procedural filings can be leading indicators. A Regulation FD correction can hint at prior selective disclosure. Officer changes can signal strategy shifts. Material agreements may change obligations. Analysts are advising that income and governance-minded holders actually read these filings rather than rely on headlines.
Let's pivot to big company earnings. FedEx had a notable day.
FedEx finished the day up about 9% after beating third quarter estimates and raising its full-year profit outlook. Analysts see this as evidence that cost-cutting and network rationalization are starting to flow through margins.
Yeah, absolutely. That felt like a classic example of fundamentals trumping macro.
Exactly. Analysts caution sustainability matters. Whether the margin improvement is structural or temporary depends on demand trends in e-commerce and B2B volumes. But a beat plus raise guidance still moves big cap stocks, even in a choppy market.
So, tying these threads together, what's the synthesis here?
There are 4 cross-cutting themes. 1. Commodity sensitivity and project optionality, particularly for porphyry copper deposits. 2. Idiosyncratic risk amplified by macro flows. Think small cap tech getting hit twice. 3. Rising regulatory and compliance risk for hardware and supply chains. 4. Corporate disclosure vigilance matters again. Those 8Ks are not always trivial.
I mean, when you step back and look at this, the market was basically bifurcating today.
Right, commodity and some large cap winners that can demonstrate cash conversion and margin progress outperformed, while more levered, smaller tech names were vulnerable to liquidity shocks and governance or financing risk.
Let's unpack areas of disagreement among analysts. Where were the debates most heated?
There were three main debates. First, valuation for sievers. Some see durable photonics IP, others focus on near-term cash burn and dilution. Second, the macro versus micro argument. Some strategists argued index weakness dominated small cap moves, while others said company fundamentals could still win out. Third, the export control enforcement question. Isolated bad actors versus systemic compliance gaps.
Short reaction.
Yeah.
Let's give listeners some accessible explainers. First, what is a pre-feasibility study, and why does it matter for a project like Schaft Creek?
A pre-feasibility study, or PFS, is the step that moves a deposit from exploration into formal engineering and mine planning. It produces scoping inputs, estimated capital costs, operating costs, and likely production profiles that feed into feasibility and financing discussions. At a higher copper price, those numbers can change the NPV and payback timing materially.
And for the super micro case, in plain language, what are the market implications?
In plain terms, alleged concealment of export control violations raises reputational, legal, and supply chain risk. For hardware integrators and logistics partners, expect tighter KYC, longer shipping timelines on sensitive gear, and potentially higher compliance costs. That can show up in volatility for related stocks.
So, for small cap tech traders, what should they be watching day to day?
Monitor balance sheet disclosures, upcoming financing timelines, and analyst commentary on dilution risk. Liquidity and momentum can flip quickly, so cash runway and financing cadences matter more than ever.
Let's run through implications by investor type quickly. Commodity investors first.
Data suggests higher copper prices materially boost project NPV. Watch PFS progress, drill results, permitting updates, and partner balance sheet health, like Teck's cash balance, because funding ability reduces execution risk.
Small cap tech traders?
Volatility likely remains elevated. Prioritize cash runway disclosures and financing timelines. Momentum traders will continue to drive rapid moves in either direction.
Large cap and fundamental investors?
The FedEx beat reminded everyone that earnings beats and guidance still move stocks amid macro noise. For industrials and transporters, watch margin trajectory and volume mix as the next signals.
Income and fund investors?
Read those Form 8K filings. Funds and closed-end vehicles can have distribution changes or material agreements disclosed there. That can affect payouts or governance, and it's worth scanning exhibits for detail.
Governance and compliance-focused investors?
The indictment and the 8K cluster make diligence more important, from export control compliance to board continuity and disclosure practices.
Short reaction.
Right.
Okay, tactical watch list. What should listeners calendarize?
For commodity plays, PFS kickoffs, drill results, and price scenarios. For small cap tech, upcoming financing dates and analyst notes. For hardware integrators, legal developments and export control enforcement updates. For governance-focused holders, the 8Ks we mentioned and any follow-up exhibits.
Final synthesis and takeaways?
Bottom line, markets close with a bifurcation. Commodity and some large cap winners that can show cash conversion and margin progress outperformed, whereas levered small cap tech names were vulnerable to liquidity and governance shocks. Regulatory headlines increased cross-sector operational risk, which can magnify price moves.
So, what should listeners do with this information in practical terms?
Use event calendars to align time horizons with milestones. PFS, drill results, 8K follow-ups, and any legal proceedings. Analysts note these are information-driven repricings rather than universal signals to change strategies. And remember, this is market analysis for informational purposes only.
Concise and useful. Love it.
Honestly, I was a bit surprised by how much the 8K cluster drove attention today. Small procedural items can be meaningful if you pay attention.
All right, clear takeaways. 1. Copper at about $5 per pound changes project optionality. 2. Small cap tech faces amplified idiosyncratic risk amid index weakness. 3. Export control enforcement is an operational risk for hardware players. 4. Read your 8Ks if you care about distributions or governance.
And to add to that, earnings and guidance still move big cap narratives, as we saw with FedEx's third quarter beat and raised outlook.
If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. Thanks for listening to Alpha Recap.